Hi, Alpha Capital crew. It's the Pep and Planty show again. We're back with something a little bit different, famous trading quotes and trying to guess who said what. Hopefully we can take you through some of the best parts of financial history.
Trading is very competitive and you have to be able to get your butt kicked.
Well, I don't know who said it, but it's it's what you need to kind of capture, isn't it, out in the trading world? You're going to lose.
Exactly.
You can't get bounce back ability, I call it. If you want.
Can't handle your losses, you're in the wrong game.
Exactly. I think so. You've got to get in there. You've got to get. You basically there's no sitting on the edge on the fringe. You've got to get in amongst the fight and expect to get hit a couple of times. Otherwise, you're not going to make any progress. Who said that? Paul Tudor Jones, one of the original market wizards. Very famous guy. Don't remember that, unfortunately, but he's dead right.
Yeah. Never,
ever argue with your trading system.
Well, as long as your system has an edge and it's profitable.
Yeah.
If it is, that's when you don't argue with it.
Yeah, permanent argument is mine, I think, at the minute. I'm not quite sure. Have you heard of that? Never, ever argue with your trading systems. It's someone pretty modern probably to say that.
Yeah, I've no idea. I'm not going to know who any of these people. I couldn't even make a guess.
I don't know. Let's go ICT. Michael Cavell.
Who's that?
Do you know who that is?
No.
Sorry, Michael. Michael, I'm going to look you up straight away.
For some hedge fund manager, maybe. An investment in knowledge pays the best interest.
Spot on, isn't it?
It's like I was saying earlier. Well, what Alex was saying, you need
resilience,
knowledge, resilience, and psychology. And yeah, you're not going to get very far if you don't know what you're doing.
Yeah, I mean, it's like anything else which we say in this part. You don't really, you don't fail, you don't lose. You're building knowledge, aren't you?
Yeah, and it takes time to build knowledge, especially in the trading space. You know, how long do you think it takes to learn trading? Just
you're always
generally
learning.
Well, yeah,
you're
that's
always
true.
learning.
That's true.
It's but yeah, you've got to give yourself a good couple of years just understanding the fundamentals and technicals. You know, you can get a working knowledge, but to feel like you're totally on top of it, I'd say 12 to 18 months min, I reckon.
Yeah. I think a lot of mentorships, you know, they do 30-day mentorships, but even then, once you complete that, you got to have skin in the game.
It's not just that. I think you are going through cycles. And literally, some of these cycles can be 1 year, 4 year, multi-decade stuff. And often, I don't know if it might come up. There are famous quotes about having to go through every cycle, to totally understand. And that's probably 20, 30 years to go through, every time. We're now repeating what's gone through in the 70s, So Benjamin Franklin.
How do we not get that?
Founding fathers, isn't it? All that. The market is a device for transferring money from the impatient to the patient.
Definitely heard that quote before. But yeah, very true. Got to sit on your hands, wait for the right opportunities.
We've said it before, haven't we? It's most difficult, not trading, infrequent trading, waiting for your system to work, not chasing it, not making it happen.
Yeah. Don't approach a day thinking you got to make a set amount, because failure is just around the corner when you got that approach.
Yeah, and then you'll end up chasing it. That's more often than what impatient means. Who said that? Warren Buffett. There's not a week goes by now. I look through, the weekly journals for the market, and everyone's doing a Buffett quote.
Oh, really?
It's just let's hope just because he's been record cash, let's make sure he invests it properly. Do more of what works and less of what doesn't.
Common sense would prevail, you think, with that quote. But again,
Steve Jobs,
Elon Musk,
Bill Gates, someone like that. Steve Clark. Oh.
Who's that? Who's Steve Clark?
He's a famous golfer, isn't he? Must have seen him on the golf course.
If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. These quotes have a theme of doing less is more. That's
it. You haven't got the old Rome built in a day, isn't it? It's the old classic. Build it.
Yeah.
If you're in a hot street, it's going to work, and it's based on your research, blah blah. Trying to make every day. It's like these when you see these videos saying, 20 grand a day. It just doesn't happen.
It's impossible.
You have flat days, you have losing days, and it's about making the most when you're hot. Do we get a car or a speedboat if we get Bill Lipschutz? Goal of a successful trader is to make the best trades. Money is secondary.
And that's just following the process, sticking to your strategy.
Alex was talking about this earlier. Yes, the money takes care of itself. It's you're detaching it. Most people, I think, that are really successful, the financial aspect's gone, hasn't it? It's kind of more interested in actual winning and success of it all. But it's properly detaching yourself, isn't it? Making
You've got to be fairly robotic with trading, treat it like a business.
It's interesting. We're talking to Ben earlier. He's more on the art over science.
Oh, really?
So
Okay.
we actually saw some daily range, a guy using daily ranges, which is what he was first taught. Again, like, he prefers to have a scope for systematic trading, but having some
You've got to have some discretionary in there.
But
what's the percentage? What do you think should be?
What,
80% robotic, 20% discretionary, or
probably? I mean, you've got to be relatively systematic, haven't you? Whether that is based on spotting the price action, using charts and graphs, understanding fundamentals. There's got to be something that is your peg, and then around it.
Because I personally have a checklist. I just systematically go through the top 5 things, and then maybe a bit of discretionary after that. But if the green light isn't there,
the definition of that, your best trade is finding your maximum confidence, isn't it? So,
Alexander Elder.
Would he ask his younger self?
I know where I'm getting out before I get in. Referring to the importance of a stop loss.
Well, not just that. I think this is something I was talking about earlier. The reason why you look at fundamentals, and a lot of people say they don't ever want to touch economic news. It's not because you're betting on which way the news is going. It's to prepare for what your exit will look like, or for where the entry might be. So you're trying to plan out 2 or 3 different scenarios, and then you've already got that in mind for the successful trade. You know where it's going to go. You've got it's more the TP, isn't it, angle of the thing than just the stop loss.
Yes,
so it works both ways. A lot of people think the systematic bit is being stop loss, but you should have a good idea. Where the impulsive move is, and then because otherwise you're getting into the realms of never cashing in and.
Greed takes over. You just try to let your trade run. For me, before I'm placing a trade, I need to figure out my lot size and just understand where your stop is going to be in regards to structure.
And then
sometimes I can flex on a TP depending on price action volume. But
do you move your break evens around?
I literally had a trade today where I was moving my stop, just trailing my stop loss.
Yeah,
just trying to just let the trade take me out.
But so again, that's part of that.
Yeah.
It's okay to be wrong, but it's unforgivable to stay wrong. So that's a kind of play on what Einstein says, isn't it? It's like the biggest fool is not learning from, is repeating the same mistake. Yeah, unless you've proven in the past that what you do works.
Yeah, exactly.
If it's never worked, then you need to move on, don't you, and accept the fact that you were never right in the first place.
Yeah, I guess you always have to try to optimize your system, because how long can a system stay profitable? It's
another argument, doesn't it? Depends how often you're on YouTube telling everyone about it.
Yeah.
But I mean, there was always that. More and more you go into AI systematic world, things will get traded away because people are looking for them.
Yeah, because there's got to be some element of human intervention, or else all the EAs, or else nobody would ever manually trade. So they can't be profitable over the long run.
How does your back testing, forward testing? Is it the fact that you play? You know you've got a 20% run likely that could be a loser.
Yeah.
Are you just amongst that? You need to know. You need to understand your numbers, and you need to be doing it on a large sample.
Yeah,
that's probably
you need to manage your risk as well during those drawdowns. You need to halve your risk. So obviously the thing not to do is start doubling down, because that's only going to put you in a deeper drawdown. I think you'll end up blowing an account.
To me, it's staying in the game, and that is reducing stake size until things change in your favour. Martin Zweig, he's a YouTuber, isn't he?
I don't know.
Don't worry about what the markets are going to do. Worry about what you are going to do in response to the market. I don't know. That just reminds me of Peter Kay more than anything. The old curry scene, isn't it? The old Kaylee. Wardrobe monsters. Don't worry about the wardrobe monsters. It's the burglars you've got to worry about. We're all trying to get an edge on what our view is in terms of how it sits with our strategy, but there's no point trying to make everything morph into your view. You've got to react with the probabilities. That's why I always say I always have an alternative, if not two, from what the market setup is, just for that is what you're looking for. If that's a failure, then you move on to the next most likely setup.
This reminds me of, when people say the markets, the markets don't care about you. They don't care about your system, what edge you have. The markets are going to do what they're going to do. And it's up to you to how you adapt to that. Yeah,
well, when I try and talk to people and say, look, what you got to realise is everybody's out there formulating a plan, and there's so many strategies and there's so many different investors. I mean, 20 or so different types of investor. Everyone's in the market, but we're trying to find who's predominant. And that is what changes the the direction of the markets to me. And that is why I like to have fundamentals in the mix, because I'm trying to work out which players are going to be putting the most money in at any one time.
I guess when you're
everything's
trading,
in there.
Yeah, the majors, I guess you need to understand, are you for or against the dollar? That's what I try to figure out before I start the trading day.
You know, fantastic top-down start with the biggest instrument. That's where the flows come from. It's I've always said that's why instantly I said I need access to DXY when I started. I said, what are you talking about? So, well, everything comes from a view of the dollar, basically. The biggest markets, the derivatives markets and the bond market, and they're all in dollars. So you need to know what's going on. Is it Peter Kay?
No.
Michael Carr? Oh, no, I should know that. We simply attempt to be fearful when others are greedy, and to be greedy only when others are fearful. I don't know, that is a famous old one. Is it someone like Jesse Livermore or something like that? Or is it Gordon? Is it Gordon Gekko? Could be any of these eponymous heroes. Who's it? Attempt to be fearful when others are greedy.
Is this saying you need to do the opposite of what the mass is doing?
Exactly.
Especially with things like Bitcoin.
This is the famous of the famous, isn't it? Come on. I do not know this one.
Warren Buffett. Yes.
Trading doesn't just reveal your character; it also builds it. If you stay in the game long enough, it's character building. Character building,
discipline, perseverance, patience. Yeah, all these things make you a better person in general, and they'll complement your life in other areas as well.
But yeah, in the early days, you're going to be petulant, throwing things around, kicking the dog.
Yeah, system hopping.
Chasing losses until you run out of money.
I think I'm still emotional when I trade. I know I shouldn't be, but if I have a loss, I'll be pissed off. I'm not good. I'll admit it. The rest of the day, I'll be slightly annoyed.
Yeah, so I mean, nobody likes losing, do they? At the end of the day, it's kind of it's so difficult. Yeah. You try and teach being different, but you still think.
Doesn't mean I go on tilt though.
WTF? How the hell have I done that? You know, especially those when you end up going and doing something completely different from what you set out to do for the week or something.
Yeah.
And by the end of the week, you've gone, how on earth have I managed to lose money doing that?
Yeah. But again, you've got to have some self-control and not put yourself on tilt, go into a huge drawdown.
Yeah, it's a big condition when you're in the market making side of things, because you get put into positions by clients. And then sometimes you can end up convincing yourself halfway through it that actually you've changed your mind and that actually you're going to do the opposite, not knowing fully where the value of money is, and the client's probably 10 times bigger than you thought he was. But just don't really, don't play the trades and the and the patterns rather than thinking you're going to beat that person just because you're taking them on.
Exactly, like you said earlier, you just got to keep yourself in the game long enough to live to fight another day.
This is it. And even when there's, you sat with a chart and there's someone sat there with an order, at some point they're going to move, because no one likes, unless they really think that this thing's going up or down, they don't like someone else coming and taking or hitting them, because you start to get suspicious that actually, do they know more than me? Because you're starting to trade it. So you'll see people will move their levels around. Yeah. It's just, again, that's a psychological issue to get over, isn't it? You've got to stick to the plan.
Yeah, exactly. I think the one thing I struggled with was when you're in a drawdown on a funded, say you're in a 7% drawdown.
You've done all that hard work to get there.
Yeah, and then you start thinking to yourself, okay, well, right, I need to go really heavy on risk to just get back to break even. But in reality, you should just chip away. Because it's harder to go through a whole challenge again, because trust me, that if you've got a funded account, you need to just hold on to it as long as possible.
Definitely. It's like that is literally the quote for you, isn't it? It also builds if you stay in the game long enough. And that's the same for the account. Yeah. You can chip away that, you can compound, and before you know it, actually, why don't I do this every day? Yeah. It's the big knockout trade. I think people need to get used to the fact that happens so infrequently. You actually lose more hanging on for the whopper trade and doubling and trebling into it than if you just systematically take a little bit.
100%.
Ivan Biaggi. Beware of trading quotes.
No, what I relate to this is I've done a couple of videos recently where the worst trading advice is just to copy somebody else's system. The takeaway I get from this is, I guess you need to go on your own journey, have your own system, put your own rules in place, your own risk management, kind of build trading around your personality and lifestyle.
Yeah, there's another way of looking at it. This might be a the futures or options person, that people are bluffing with quotes.
Okay, so is that way? Okay,
could be prices, and it's kind of only. And this is like I said about the election, and you had that whale that put all the money on the Trump win, and the Democratic leaning media spent 3 weeks trying to tell you how not to follow the money, and the betting market was just skewed and all this. It's actually age old. You don't fight the money. You don't fight the money of the trades. So and people are quoting, don't necessarily follow it, but if someone trades, that's far more important. And stick to what the real money is. So there's a number of ways of looking at that. And that was Andreas Klenhoff. Is it Klenau? Klenhoff.